Weak economic data, along with concerns over tariffs on goods from Canada and Mexico, have weighed on sentiment at Wall Street. Meanwhile, the DAX remains unstoppable. After Friday's recovery, U.S. markets shifted back into reverse gear yesterday. The latest economic data has unsettled investors, and there is growing concern over the tariffs taking effect on trade with Canada and Mexico, two of the most important trading partners. After a lackluster start, losses intensified throughout the session, and by the end of the day, all major indices closed significantly lower. How has this affected my trading account? How did my Friday long trade perform? And what new trade ideas have I executed? You'll find out in this video. Welcome back to my trading desk. Today I want to start by discussing my Friday trade. After two losing trades in the Nasdaq 100 and Dow Jones, I decided to take another long trade in the micro E-mini S&P 500. I entered around 5,900 points, aiming to close the trade in profit at 6,000 points. This plan played out perfectly. I was able to catch the exact daily high at 6,000 points in the March futures contract. At 7:12 a.m., I sold my 5 contracts in profit, realizing a gain of $2,356. This trade pushed my trading account to a new all-time high. Later in the afternoon, I attempted another long trade at 5,846 points. My idea was that the market would retest the support zone, possibly triggering stop-loss orders before initiating an upward move. However, the market fell more than expected, and I was stopped out at 5,825.5 points. Looking back, the trade would now be in profit, but in trading, it is crucial to keep losses as small as possible. Even if you're convinced that a trade could still work out, you should never move your stop-loss arbitrarily, as growing losses become increasingly difficult to recover from over time. Trading is a game of probabilities. The same setups or chart patterns can produce different outcomes, depending on market conditions. Even a perfectly executed trade can end in a loss. That's just part of trading. This is why we, as traders, must learn to accept losses. Only those who are willing to cut their losses quickly can remain profitable in the long run. In this case, I had to accept the loss at 5,825.5 points. I applied the same strategy in the Nasdaq 100. The 20,500-point support zone looked like a solid area for a potential bounce, so I went long at 20,480 points. However, the market failed to hold this support, and I was stopped out at 20,380 points. These two losing trades resulted in a total loss of $1,125. I was expecting the market to show a recovery, but even in overnight trading, we can see that these support zones are struggling to hold. A look at the daily chart shows that we closed very close to these critical support levels. If these levels break decisively, we could see an accelerated sell-off, which is why I am watching this area very closely. That wraps up my Monday trades. Now I'm curious to see how the market develops. After European indices reached new all-time highs for several days in a row, I now see them as overbought. That's why I started actively looking for short setups early Tuesday morning. In the EuroStoxx 50, a bearish engulfing pattern formed on the 4-hour chart, indicating that the market rejected prices above the 5,550-point zone and fell back into its range. Based on this signal, I opened a short position at 5,508 points, aiming to retest the lower range boundary. My initial stop loss was set at 5,580 points, but after the trade moved in my favor, I trailed my stop to 5,522 points to quickly minimize risk. Now my risk per contract is just 14 points, meaning my total risk in this trade is only $280, while my potential profit is $2,000, a great risk-reward ratio. I followed a similar strategy in the DAX. The market had formed a range between 23,000 and 22,300 points. On Monday, the DAX briefly broke above 23,000 points, but in the early hours of Tuesday, it fell back into the range. This rejection of all-time highs was an opportunity for a short trade, so I entered a short position at 22,951 points. My original stop loss was at 23,080 points, but since the trade developed well, I trailed my stop loss down to 23,000 points to reduce risk early. This adjustment brought my current risk to just 49 points, which equates to $250 per contract, while my profit target at 22,300 points could result in a $3,000 gain. Together, these two short trades are currently up around $1,950. They are developing well, and my risk is now significantly reduced. Now I'm eager to see how these positions evolve throughout the day. At the moment, I'm staying on the sidelines in the U.S. markets, as we are at a critical support level. The market is showing little upward momentum, yet selling pressure keeps returning, fueled by uncertainty in the news cycle. This makes it difficult to find clear trade setups, which is why, for now, I prefer to observe rather than take action. Although I was able to successfully close my Friday trade, the two losing trades on Monday made it clear that long positions are currently not working well. The ongoing market uncertainty has led me to hold off on new setups in U.S. indices until I see clearer opportunities. Instead, I am currently focusing on my two short trades in the DAX and EuroStoxx 50, and I'm eager to see how these positions develop. One thing I'm particularly excited about is that my trading account has reached a new all-time high. And with the unrealized gains from the DAX and EuroStoxx, we are now standing at record levels. How these trades played out and how my trading account and my Road to 1 Million project continue to evolve will be revealed in the upcoming videos. If you enjoy this format and want to support me, subscribe to the channel, like the video, and leave a comment on whether you believe the U.S. indices will end the year positive or negative. I look forward to hearing your thoughts and feedback.